I'm delighted to introduce co-founder and president of MI2, which is Macro Intelligent Partners, Julian and Brigden. Macro Intelligence 2 Partners LLC is an independent research firm that provides insight into global macroeconomic and policy developments. Over to you, Julian.
Hi everyone, welcome to a little presentation we've put together here at MI2 on what we think is a pretty poignant topic actually, and that is the anatomy of a classic bubble and in the context of what we're seeing in the US growth stocks at present. Now, we've done a lot of work on what a classic bubble is, and I've got this slide here which you can peruse at your leisure. But essentially, you need kind of three elements. What you need is a great macro story, by definition, okay, with the exception maybe of the Dutch tulip bubble. Every single bubble has a great macro story. You need that compelling story to suck cash in. On the subject of cash, you need a lot of it. You need a lot of liquidity. And obviously, we put in this slide here where we've been sourcing that liquidity recently. And then finally, you need a very, very defined chart pattern, which almost every single bubble from 1929 onwards has followed. To illustrate that, here is an absolutely picture-perfect classic example, and it's silver into its highs of 2011. And what you can see here is basically there are four defined phases: stealth, discovery, mania, and bust. You typically have a bear trap. You always need a bull trap, and remember that one in particular. And then the least actually scripted sector is actually the bust, but that's important as we discuss some of these other charts. But watch this one. This one is a classic picture. Fast forward a few years from 2011 and we've just had the Bitcoin bubble, and once again it has all the classic elements of a bubble. Absolutely all the classic elements. That bear trap, that big parabolic blow off move, the bull trap bounce that got you almost back to the previous highs, and now we're in the bust phase. The bust phase, frankly, it's very difficult to figure out where this thing drops to because the move was just so incredibly rapid. Now, the thing about bubbles, and I think one point that we just want to emphasize here, is that they're very compelling. They suck you in, and the price action sucks you in. In that parabolic phrase, it looks like the thing is going to go on forever. And in the analogy I like to use is it looks like a jet fighter going vertical. The thing will just keep going, and is never going to stop. But the problem is as with a jet fighter, at some point, there just simply isn't enough oxygen to suck into that jet to keep the thing moving higher. And that is the tipping point. And in markets, that tipping point is when you move from the greed of the mania phase to the panic or fear of the bust. And the point is if that jet fighter just keeps going vertically, it doesn't stop and then fly off sideways. It dips and crashes hard. Now, if we fast forward to today's market, there's a couple of things that really strike me as exceedingly worrying. The first thing is when you look at the divergence between the S&P growth sector or the S&P value sector, and growth is all these heavily dominated tech names, you know, the FANGs, you can see that essentially to the tick, we have pushed that relative pricing back to March of 2000 highs. This greatly worries me. This does suggest definitively bubble-like tendencies in these and valuations in these single names. Now, one of them that we flagged back in the middle of the year was Netflix. Netflix, great company, love it. And I do want to stress here, guys, this is really nothing about fundamentals, okay? This is simply about overvaluation. This is simply, as I said, about liquidity being driven in a frenzy and fitting a particular chart pattern. But as you can see here, At its cycle high in the middle of this year, Netflix was identical to Cisco in terms of a chart pattern from back in 2000. Even the PEs were almost identical, right? I'm not talking about pets.com from 2000. I'm talking about a real company, a company that back then was truly the backbone of the internet. And so once again, it is nothing to do with fundamentals. It's simply about chart patterns. Now, another one, if we zoom in and look at this chart pattern much more closely, is a name like Nvidia. Now, we flagged this on Twitter to people a couple of months ago, and we said, watch out, because when this thing drops, it's going to be falling quite rapidly. And what's interesting is, you know, after the 55% drop that we've seen already, which even by bubble standards is quite a big drop, the thing that we're watching for now is that bull trap bounce. Now, if it bounces, and I'm looking for either to close some of these gaps or potentially, I think it's hard in the case of Nvidia, but potentially move all the way back to that neckline at 270s. These bull trap bounces are very, very powerful moves. But the point is, if it fails in this next rally, that's it. This thing is going to fall for a long time, an extended period. That confirmation of that bull trap and ultimate failure is actually the death nail in the stock. But the one that I really want you to keep an eye on, the real behemoth here for the market, because it is present in such weighting in all of these ETFs that we trade, and its dominance of the overall psychology around this FANG space, is Amazon. Amazon also, as you can see here, it has satisfied every single criteria. Okay, we've had a stealth discovery mania phase, we've had the bear trap, we've had the parabolic move, and I will also point out that what's very interesting about this is the liquidity has once again come from essentially from central banks. This time, interestingly, the thing that really started the mania phase off was excuse me, was that ECB move to introduce QE in combination with negative interest rates. That crushed term risk premium in the US bond market. That made funding incredibly cheap. And we know that the oxymoron about these growth stocks is they are reliant on cheap capital to fund their growth. And so when did the stock go parabolic? When funding got incredibly cheap. Now, I think we're already in the bust phase, but what I need is confirmation of that, and that confirmation comes from that bull trap rally, a bull trap rally that could take us all the way back to that neckline at 1925. Now, if it fails, if it blows right through that and we go through the highs, then we're wrong in it, and we're in a new upward phase. But if we fail in this up move, this coming up move, and it has to have this move to be a bubble. Almost every single chart that we've ever looked at that was classified as a bubble has that bull trap rally. I think it's going to set you up for a whole slew of other trades, whether you are looking to buy fixed income, broadly short US stocks. That's why I think these bubbles at this point are so poignant. Thanks very much indeed, and talk to you soon.